Welcome to the Deep Dive. Today, we are undertaking a really critical mission. We're going to peel back the layers on the Iraqi dinar, which is a topic often buried under, well, just mountains of speculation and a lot of unverified claims.
That's right. And our goal here is, absolute clarity. We are stripping away the rumors and, frankly, all the hype. We're going to focus strictly on verifiable policy shifts, hard data, and measurable economic developments, the things that actually build real structural value.
And we've assembled a pretty comprehensive stack of sources for you today. We're covering everything from the central bank's strategic moves, major foreign investment deals, all the way to critical infrastructure restarts.
And we're also covering security upgrades, and I think this is the most important part, a massive, really foundational internal compliance measure.
Exactly. So we're aiming to provide you with the factual roadmap. Instead of looking for some sudden, overnight event, we are analyzing the actual foundation being built, the structure that supports long-term sustained currency strength.
If you really want to understand the policy drivers, the things actually anchoring the dinar, then this deep dive is your shortcut.
Okay, let's just jump right in. We have to start with the anchor in all of this. The Central Bank of Iraq, the CBI. We often hear, these conflicting narratives about what they're doing. But if you look at their investment department strategy, what does their blueprint actually tell us?
The blueprint, the day-to-day operations, they signal one thing above all else: controlled, steady stability. I mean, it's the complete antithesis of a quick, volatile revaluation event.
So what does that look like day to day?
Well, they manage Iraq's substantial foreign assets. They oversee the crucial crude oil export credits, and they're regularly publishing these very detailed liquidity reports.
And what about that international integration piece? That seems to be a huge focus for them.
It's paramount. They are strictly enforcing compliance with major international protocols.
Yeah.
We're talking SWIFT, all the other banking rules you need for global transactions.
So when a central bank focuses that intensely on transparency and compliance, what's the real message they're sending?
The message is long-term confidence. They're positioning themselves as a reliable, an auditable global partner, not some financial entity that's just waiting to flip a secret switch.
I have to ask the question that I know is on everyone's mind. If they're building up all these reserves, isn't that exactly what you do right before a massive upward rate change? How do we know this isn't just, window dressing for that secret switch?
Because the purpose of that kind of reserve management, especially when you combine it with this level of compliance, is to support measurable, gradual appreciation, the kind that's driven by a healthy, growing economy.
Not a sudden shock?
Exactly. Volatility destroys foreign investment appeal. Strong reserves are built to buffer the economy against shocks. It proves long-term competence, which you need to sustain a future rate, not just to initiate some flash event. All of the CBI's actions, they point to a multi-year strategy, not an instantaneous windfall.
That's a critical distinction. Stability and policy continuity over these quick, volatile fixes. And speaking of continuity, we saw all the usual chatter online when Sudanese coalition secured its position as the largest bloc.
Oh yes, the forums lit up.
The forums lit up, equating this political victory with some kind of instant wealth event.
And what's fascinating there, the complete disconnect between political theater and fiscal reality. Historically, a political victory supports policy continuity, which is great for a nation, but that continuity only supports gradual economic appreciation over a period of, years.
Right. It's the policy reforms that are the real catalysts, not the election wins.
Precisely. Things like budget reforms, new banking rules, those are the catalysts. A change in the political lineup doesn't just magically adjust the exchange rate overnight.
So let's focus on those tangible catalysts then, the policy that actually matters. We are seeing foreign capital starting to flow in, which, that translates directly into structural support for the economy.
Yes, and we have several recent measurable examples of this. First, you have the France-Iraq Memorandum of Understanding. So Business France and the Iraqi-French Business Council are working to expand partnerships across energy, infrastructure, and technology transfer.
And that last part is key, right? Tech transfer. This isn't just about selling them things.
Exactly. It's about building Iraqi capacity for the long term. And we're seeing a really similar focus from the U.S. side, especially in the energy sector.
Tell me about that.
Well, the meeting between the U.S. Kurdistan Business Council and Prime Minister Masroor Barzani, it was heavily focused on expanding natural gas exploration and also on just improving the overall investment environment.
Which signals trust.
It signals trust. When major international firms decide to inject capital and technology into long-term projects, That directly leads to capital inflow and, of course, greater economic resilience.
So if you connect those two dots, French tech and U.S. energy, it means more stable capital, more specialized jobs, and fundamentally a stronger long-term dinar.
Precisely. And none of that capital is going to stick around if the governance isn't transparent. Which brings us to a huge confidence factor we saw recently. The renewal of the Oversight Agreement involving the UNDP and Japan's JIORAA for Iraq's $11 billion in ODA-funded projects.
Okay, so ODA, Official Development Assistance, that's foreign aid money. Why is renewing that international oversight so important for currency confidence?
Because ODA projects are inherently high scrutiny. Renewing that oversight is aimed directly at maximizing transparency and guaranteeing that these projects are executed properly.
So for a foreign investor watching from the sidelines, what's the signal?
The signal is loud and clear.
Mm-hmm.
International partners are actively making sure that $11 billion is spent responsibly. Better governance translates directly to higher investor confidence, which stabilizes a currency far more effectively than any market rumor ever could. It lowers the risk premium.
All right, let's pivot from that high-level policy down to the physical infrastructure, the ground game. I mean, the most robust financial system in the world doesn't mean much if you can't actually power your factories. And this brings us to a pretty monumental development.
Absolutely monumental. The restart of the 1,400-megawatt Yusufia thermal power plant is massive. And to put this in perspective for you, that plant had been stalled since 1990.
Wow, since 1990.
Think about that. Over 3 decades, a whole generation never saw that plant operate. It's a powerful symbol of economic revival.
And the financial model they used to get it running again is pretty noteworthy too, isn't it?
It is. They used a build-own-operate model, or BUO. It was financed and operated by Al Rita Holding. Using a model like BO means the project can move forward without draining immediate state funds. You're leveraging private sector efficiency and capital.
So 1,400 megawatts of power. What's the direct financial equation here? How does that support the dinar's foundation?
It's simple, and it's measurable. More reliable electricity means more industrial activity, everything from small shops to large manufacturing centers. And that increased output strengthens GDP and reduces the need for expensive energy imports. That growth is the real-world backing for the currency.
But infrastructure development in these critical sectors is never seamless. We saw some significant controversy recently around telecom security. What were the concerns with those fiber optic maintenance contracts?
There was immediate and significant backlash. The contracts were awarded to Al Mohandy's general company. This immediately raised fears that it could potentially allow non-state actors or militias access to sensitive national data through the fiber optic network.
Now, Iraqi officials denied those surveillance claims, but it's the lingering perception that really matters for foreign capital, isn't it?
Precisely. Uncertainty in a critical tech sector like that, it just creates risk. Why would a foreign multinational invest heavily in digital services if they're worried their data integrity could be compromised? Predictable, stable telecom governance is non-negotiable for foreign investors.
Right. But to contrast that uncertainty, we did see a very clear step forward on the physical security side. The U.S. approved a $100 million military communications sale.
That package is a huge operational deal. It covers radios, VSAT terminals, IT infrastructure, and long-term support. And while it's a security deal, it has a direct economic benefit. Better, more reliable security infrastructure significantly reduces the operational risk and the insurance costs for foreign companies on the ground.
That makes sense. It's a precondition for large-scale economic engagement.
Absolutely.
So let's talk about market diversification and risk. We saw Iran issue a sort of a public warning about potentially losing its market share in Iraq.
This is a really great indicator of the shifting dynamics in the region. Iran currently holds about a 20% share of Iraq's consumer market. That's, $12 to $15 billion a year in bilateral trade. And they warned that they risk losing that unless they modernize their outdated logistics.
So why should our listener care if Iran maintains that share or not? What's the dinar relevance there?
The relevance is all about geopolitical risk. A heavy reliance on one neighbor for huge amounts of consumer goods makes your economy really vulnerable to regional tensions.
So if you can diversify.
If you can diversify your import market goods from Turkey, Jordan, Europe, you reduce that concentrated risk. And that resilience is unequivocally positive for long-term currency stability.
Okay, before we move on to what I think is the biggest story of the day, we have to mention this Iraqi Infrastructure Fund, the IIF. It sort of popped up online.
Yes, with a new website and a very unclear structure, it generated a bit of chatter. And this raises a crucial point about due diligence.
Which is?
What truly influences a country's currency? It's a measurable policy, real investment, tangible infrastructure.
Yeah.
Unverified entities like this, claiming to finance mega projects but lacking any verifiable structure or investor transparency,
Right.
they're just noise.
Right. So the rule for the listener is, until you can prove its legitimacy and find verifiable sources of capital, it just doesn't move the needle.
Caution is always the rule.
Now, let's transition to what we believe is the single most important, though maybe the most technical policy step covered in this entire deep dive, and that is the Central Bank of Iraq's recent release of the full comprehensive rulebook for every single banknote in circulation.
This is foundational, and we need to be very clear right up front about what this is not. This is not a redenomination. It is not a rate change. It is not some immediate reset of the currency. Those are all things based on speculation.
Okay. So strip away the rumors. What is this rulebook, functionally?
It is a massive, binding, legal and procedural document, and it's focused on compliance, anti-fraud measures, and intensive anti-money laundering or AML modernization. It is Iraq signaling at the most granular level that it's professionalizing every aspect of its cash handling to meet international norms.
Okay, let's break that down in plain English for everyone. What specific classifications did the CBI establish for the currency?
They now strictly define what qualifies as a valid note, what's considered damaged or replaceable, what's counterfeit, and what is actually legal to possess. It just brings discipline to a huge cash economy.
You mentioned some specific notes are now subject to confiscation. There must be some historical context there.
Absolutely. The rulebook explicitly names confiscatable notes, things like the Mosul perforated notes and currency that was stolen during specific eras of conflict. So this isn't just about cash handling. It's about cleaning up the legacy of illicit finance that built up during periods of instability. You're removing those funds from the legitimate system.
And what happens now if you have severely damaged currency? The process sounds a lot stricter.
It's designed to be rigorous. It's about accountability. If you have notes that are severely damaged, say, burned or chemically altered, you might now be required to provide personal ID, detailed proof of where the funds came from, and you might even pay a 10% fee for replacement.
Wow. And what about for the banks themselves? What mandates did the CBI include for them?
This is a huge, costly commitment for the entire financial sector. Banks are now mandated to modernize their entire infrastructure. That means investing in sophisticated international-grade sorting machines, upgrading armored transport, and implementing digital tracking systems for cash.
So they're moving from a legacy cash system to a modern traceable operation.
Exactly. A traceable, auditable, modern logistics operation. And this modernization, it also extends to how they handle foreign currency, which links directly back to those U.S. Treasury requirements we talked about earlier.
That connection seems paramount.
It is. Stricter rules are now in place for USD and EUR deposits, and they mirror U.S. Treasury requirements for AML/KYC, Know Your Customer enforcement. By implementing these standards, Iraq is showing its commitment to being a secure conduit for foreign currency.
This really feels like the aha moment. So why does defining what makes a note valid or requiring banks to buy new sorting machines, why does that fundamentally change the long-term outlook for the dinar?
This is the final synthesis. This entire policy is the professionalization of the financial system. It prepares Iraq for strong international compliance, for advanced digital auditing, and for integration into a global system that demands verifiable traceability.
So it doesn't affect the immediate exchange rate.
Not at all. It fundamentally strengthens the system, the structure of trust and accountability that will support the currency's value indefinitely into the future.
It's the infrastructure for global trust. If major investors and global central banks know that your money supply is auditable, traceable, and secure, they are much more likely to engage with your market.
Exactly right. Strong anti-fraud protections and increased financial transparency are the essential backbone for sustained economic health.
Yeah.
They're a precondition for any greater currency mobility in the future.
And that brings us to the close of our deep dive into the real, measurable drivers of Iraqi economic stability. We've seen tangible progress today. Everything from those international oversight agreements for $11 billion in projects, to French tech transfer, U.S. security upgrades, and of course the symbolic restart of that 1,400 megawatt power plant after 30 years.
And if we connect all these diverse streams of information, the policy, the infrastructure, the financial compliance, what this deep dive really reveals is a profound strategic shift. The entire institutional focus is now squarely on robust systems, on long-term accountability, and on verifiable international compliance.
And that move, exemplified by those detailed CBI banknote standards, it indicates a rejection of quick fixes.
A total rejection of quick fixes and a real commitment to fundamental, sustained economic health, this professionalization. That is the real story you should be tracking.
Well, thank you for joining us and for committing to tracking the verified policy data that actually shapes the future. We encourage you to analyze these structural changes. Think about what shifts in Iraq's geopolitical and financial role these specific compliance measures might suggest. It's definitely something to mull over. We'll see you in the next deep dive.